Good morning, everyone. Thank you for joining us. My name is Sabrina. I'm with IA Financial Group. Today, we're going to talk about something I can honestly say we don't talk enough about. We're always helping families plan for their future, plan for their retirement. We're planning and helping them save and help create wealth. But there's kind of one aspect that we don't talk enough about that can take all that planning away and then we fall short. That would be long-term care. We are helping families, and we have to look at going ahead, the reality of any one of us having a disability or a condition that puts us into a long-term care facility is much greater than what we think. And then we have to become dependent and not while we don't have a regular income. So we're going to talk about a product that we've had, Serenity 65. I want to say thank you to WFG, this division, for doing everything that you do. When we talk about these numbers from IA, like as sales directors or inside marketing, and it doesn't matter what division, they are really a reflection of all the help that you are helping in the industry, helping families, helping corporate clients. And these numbers, we don't just randomly say these numbers. There is surveys done by independent nonprofit organizations that in our industry do research and surveys through all insurance companies. And that's where these numbers come from. So it's not just someone in the marketing department saying, oh, let's say we're number one in everything. No, these are numbers that these independent company nonprofits put together and tell the insurance companies where we're at. 1 out of 5 policies owned in Canada is with IA. Number 1 policy sold, number 1 in premium rates in life insurance. Critical illness, number 1 in a policy sold and in premium rates. Disability, number 1 in policy sold and in premium rates. In segregated funds, we've been number 1 since 2016. Again, this is all a reflection of WFG. Your hard work, your passion, your dedication. And we just want to thank you for what you do. And thank you for how you help families and business leaders. Just to remind everybody, IA is our one-stop shop, meaning we have a solution for every family in Canada, regardless. RESPs, Registered Education Savings Plans. No administration fees. No strings attached to how you get it out. Very simple. It is non-contractual, meaning I don't have to pay every month. Should I need to stop, I'm not penalized. This is a segregated fund, My Education Plus, that the government grants are applied to. Oh, sorry, I think my screen stopped sharing. Let me go back. So this is where our RESP, it is applied to. We have investments helping your families grow their business, saving for their future, their retirement, right? Or even their wealth today. Critical illness. This is a benefit that pays out while you're alive when you're diagnosed with one of the 25 critical illnesses. We have simplified versions and we have full underwritten versions. And it's a tax-free lump sum. Life insurance, term insurance, whole life insurance, participating whole life insurance, universal life, all the concepts, guaranteed issue, simplified issue, everything to help every family, starting at 6 months old, who need guaranteed issue, $10,000. 6 months old. Disability. Well, we're all independent business owners and we know business owners. If we get paid in commission, we don't pay taxes per se, and we become disabled. Well, we need an income. We need some sort of supplemental income during that time when we can't work. And we have simplified versions, which are non-medical, or the fully underwritten superior, which is fully underwritten and can be done with either net or gross income, and 10,000 would be the maximum. Let me introduce our team. We're growing because of you, and thank you. In the life insurance only, so all the term, participating, non-participating, universal life insurance, it's myself, Sabrina, Maria, and Nia. We also have 2 marketing associates, Iwana and Shayla. Jack is the sales director for living benefits. So he does critical illness and disability. And his marketing associate is Avnish. James Miller, investments, sales director, and his inside is Michael. Anything to do with investments, including RESPs. And if you have teams in Ottawa, Quebec, and the Maritimes, Stephen is the sales director for life insurance, and Alfredo is investments. So they're all there to help you. If you need to get in touch with us, sometimes we're doing lots of Zoom webinars or we're on calls. If you phone us and we don't answer right away, please leave a message. If you don't leave a message, I'm assuming you're calling another person and got that information. If you leave a message, we will call you back, or I'll have one of the insides call you back. If you text us, we'll return your text. If you WhatsApp us, we'll return your WhatsApp, email, and so forth. But if you're going to phone us, please leave a voicemail and a little bit of what you need help with, or after you hang up, text me saying, I really need you to call me back when you're available, and we'll definitely call you back. So please be patient. We are always training and helping WFG, and we always want to get back to everybody, and we will help you. Now, texting is a bit hard, so I'll give you an example. Nia's phone was stolen a while back. So people are like, where's Nia? She's not returning my text. You can't get an out of office on a text. You can't get a message saying Nia's not here anymore. So if you send us a text and we don't respond within 1 or 2 days, definitely email, call, or WhatsApp us. We have a dedicated phone line to WFG and dedicated emails, as well as your dedicated team is all dedicated to WFG only. In underwriting, if your application had to go into underwriting, meaning there are things that we have to investigate more, please only send these emails to wfgnewbusiness@ia.ca. If you CC everyone in this group and everyone else, or only send it to a sales director or inside sales, you have to make sure you send it to the proper email address. Sometimes we're traveling. I may not see that email for a few days if I am at conferences. So if it has to do with anything in underwriting, no decision, wfgnewbusiness@ia.ca. Once it's issued and you want to deliver and put the policy in force, wfgtransactions@ia.ca. This email is exactly what it says, transactions. They get your information and they assign it to the right division or person to complete it. CE credits. There are 3 available each week, provided you attend one of the life insurance presentations, one of the living benefits, and one of the investments for 45 minutes plus. It is Ontario only, and you will get these CE credits a week or 2 from now. You don't need to email the sales directors. When you log into this presentation, you have to put your email address in there, and it will show up on the chart. One area I'd like to bring you to is when you're on ia.ca, please, please, please sign up for IA Connected. When you select IA Connected, it comes up like this, and you scroll down a bit on the right-hand side. Please put your email address in there. This is going to keep you up to date all the time when there are changes, new tools to the toolbox, enhancements, decrease in rates, everything. You can't know everything from all your product providers and keep it mentally insane in your brain. You have to sign up for these emails. If it doesn't pertain to you or you're not interested in one of the emails, just delete it. But if you want to be advised of all the changes that occur, please sign up for IA Connected. For example, we recently, a few months ago, reduced our term rates. So it's more competitive in the industry. We added a new segregated fund to our universal life only, guaranteed never to have a negative rate of return. And in this economical environment, this is an amazing tool to have in your universal life. Okay, Evo. There's supposed to be another, I think, slide before this, but as you're inputting applications, for $2 million of life insurance and under age 50, we have no requirements whatsoever. That means there's no medical, paramed, blood, there's no requirements. However, through predictive analytics, while you're doing this Evo application, through predictive analytics, let's say, for example, you disclosed you had this big lump removed from your shoulder 2 years ago. Well, we need to pull it aside and say, oh, what was this big lump? Was it cancerous? Was it non-cancerous? What was it? Was it like, we have to investigate. Maybe through the application, you said, no, no, no to everything, but my client is 4'1" but weighs 500 pounds, or my client is 4'1" and weighs 82 pounds. Whether you're over or underweight, we must pull it aside. We must investigate. We must get maybe a doctor's report, a blood sample. We must investigate, and doctor's reports are important. They're done through Dynacare. Dynacare is the one who goes to the doctors and is in charge of them. We have no control. Same with any medicals. It's Dynacare who books these medicals and so forth. But doctor's reports are important because it sees history. There's another one, MIB, Medical Investigation Bureau. Let's say 3 years ago, I applied for insurance and I disclosed to my agent that I had an aneurysm. I got declined. I was angry. I didn't want to get declined. I didn't like that broker then. And then I find a new broker today, but I failed to disclose that. Well, as soon as you transmit through predictive analytics, an MIB flag will be raised. And now we have to ask more questions, look at the old application that was done, and probably do a doctor's report. These are some reasons why it's pulled aside. Even there's no medical requirements, but we have to investigate fully other issues. If it is through predictive analytics, it goes through and it's auto-approved. I think 58 to 60% are fully auto-approved when you submit those Evo applications, which means that day you get 40% and your client is fully covered. 24, 48 hours, you can deliver the policy electronically. And then the next day, the rest of your points and comp goes 60%. We're helping you to run your business with a cash flow more effectively and also have your clients covered quickly. Many of you ask this question during underwriting. What is this? What do I have to do? It says reinsurance. Insurance companies have insurance companies for insurance. If this particular client you have has a complicated medical history, I know they tell you they're healthy. I know they do. But when we get those doctor's reports, they sometimes have a different say to what has been happening. Sometimes people don't understand really what their doctors are telling them. So if it's complicated, we must send it to a reinsurance if it's complicated health or complicated lifestyle. Maybe I go scuba diving in the middle of the ocean with no air tank all by myself. I skydive without a rope. I don't know. I had a drinking and driving. I have a conviction charge. Lifestyle. These two are high risk to an insurance company. So we send them out to all of our 7 reinsurers. Not all providers do that, but we do. All of them can come back saying declined. However, sometimes one of them will come back saying, no, we'll issue it, but they have to pay a little bit more premium, say plus 50 or plus 100. Or you can issue it if it's only 500,000, not 600,000. So that's the importance of reinsurance. It takes 5 to 8 business days for them to come back. So if it's month end and it's the day before cutoff, like the 30th, and tomorrow's the 31st, and all of a sudden it goes to reinsurance, it's not going to happen until the following month. But it's to give your client the best offer we can. What's new is this: students under 3 years. Previously, it was a maximum of 100,000 previously. Now students here less than 3 years can get 250,000. We don't need reports or financials or documents. They can get up to $250,000 of life insurance. And if they have a SIN number, you don't need to provide their study permit. So that is new. That was the slide I was looking for before, but we already talked about Evo. This is one of the best things. Oh my God, someone on WhatsApp, I advised them about how to do an change, and he messaged me back going, I love this. And I'm like, thank you. Changes that you want to make to enforce policy. I want to change a beneficiary. I want to reinstate. I want to change banking. I want to add insurance. I want to decrease. I want to put a critical illness rider. Just go right here, select it, make an change. Download the policy. And once you download the policy, you verify their date of birth, and all these changes can still be made. Now, remember, if you're asking for more insurance and so forth, it does go back to underwriting, but you can do all the changes from here. The only thing you cannot do yet are disassociations. This means 2 people are on a policy and we want to pull it apart. Or conversions, not yet. Everything else can be done on eChange. It all goes on Business Tracker, so you can watch as the changes are being done. Okay. Whew, that was a lot to say. Life and Serenity. You probably all don't realize we have this product. We don't talk enough about it. And in today's market, in the Canadian insurance market, I believe there's only one other provider that has long-term insurance, but I couldn't even find it on their website. But all the providers who used to have long-term care have stopped. Why is that? Well, it's expensive. It really is expensive. And it's expensive for the insurance company. However, how are we helping our families transition to a time where they're going to need long-term care? What are we going to provide them with? We can't just keep saying invest and save. How about we offer something that is unique, almost like a 2-in-1? If you think about it, if you lose the ability to live independently, how are you not going to worry about your quality of life? Do you think the government is going to pay for everything? Absolutely not. You're getting bare minimal. The savings that you were trying to save for your retirement, you're using that up now. Can you ask your children or relatives? They're probably in the same financial state that you're in. And again, it does come down to quality of life and how we are being taken care of. If you never have gone through a situation with a grandparent or parent being immobile, you probably won't understand. But if you are a younger person, let's take Maria, for example. She broke her leg and ankle. She could not walk for months. It was almost 6 to 8 months to help even to start walking again. But what if that, was permanent and you couldn't walk? You think, oh my God, how am I going to do my job? We have to think about this. Again, it may shock you that the government does not fully pay your healthcare programs. It does not. It gives you the bare minimum. They are asking for families and rely on your families to pay for this out of their pocket. So the onus is all going back to us again. I mean, don't get me wrong, we have an amazing healthcare system. But when it comes to long-term care, and you've seen this throughout COVID, you heard all those stories. This is not just a one-time thing. This has been going on like 30, 40, 50 years in long-term care. They're understaffed. These poor people work so hard. They're underpaid. They have to work 5 times in contracts in 5 different areas. So it's hard to be in there. And again, if you're depending on the government, you're getting minimal. And if you go to the CLHIA website, there's a lot of information about long-term care and getting coverage and how much it truly costs. One thing you don't think of is it's not just for, I'm going to say people over 70. It's not just for older people. And if you're 70, it doesn't mean you're old. Long-term care is for younger people as well. And I'll give you an example. We don't have hospitals or facilities to hold people who have mental disabilities or bipolar, who can't work, disabilities. We don't have facilities. They can't stay in the hospital. So they go to long-term care homes. You can be 30 years old. Maybe you became paralyzed because you had an aneurysm. You're going to be living in a long-term care facility. There's nothing in between. So it's not just for the old. It's all of us. And we are intermixed and mingled. We can't choose who becomes our roommate. We're put together. Now, what's the cost? And I think everyone truly denies really the true cost of long-term care. So to go into a facility privately, now, I've never seen this amount, but I've seen this amount and more privately per month. If you want a 1-bedroom suite, even more. Again, I've never seen it at the lowest spectrum. And on top of this amount per month, you still need to pay for more. Haircuts, your phone, homemakers. There's still more added to your cost. If you need to go to a hospital to get an ultrasound, they don't do it at the long-term care. That's not their responsibility. You have to pay to get to that hospital. You need a personal care support worker to stay with you for that day. It could cost a day $800. How about living at home and you need constant care? Just meal preparation. Again, I'm always going to go towards the higher spectrum. If you see food cost and wage right now, I'm going to go to the higher spectrum. Bathing, dressing, an hour. Skill like an actual nurse. It can cost $35,000 to $65,000 a year just on these things alone. Where is it coming from? Are we using our pension plan? Are we cashing in our RSPs? That emergency fund we had, maybe to go on a one-in-a-lifetime trip when we're older. What about if we're just a couple and it's my husband and I can't work anymore? Now we're stressed because we're on one income. Is my mortgage paid? If I live in a condo, I still have to pay condo fees, even if my mortgage is paid. And then on top of it, I need a support care worker to come to my house. benefits? Do I have to sell my home? Maybe. Sometimes that is reality. But many of you have never, ever probably sold long-term care, so you have no idea what the industry had. In our industry, in the insurance industry, before, we used to have long-term care products. So I'm going to say generic because I'm going to bundle them all together, all the companies, and tell you what long-term care meant. And this is the product that we have. So in long-term care products, it was only long-term care that daily amount was going to go to. So I had to pick a number, 200, 500, 800, and that's the only dollar amount, but it's only meant for long-term care. If I wanted to use it for someone in my home, that was an additional rider. Here, everything's included, and I'm going to get to the product soon. The premiums in all those other products that they don't sell anymore are not guaranteed. And all those companies that had a product, in the next 5 years, those premiums are going to increase drastically. And they're not even offered, they don't even offer the product anymore. So you could outlive this product by being way too expensive. The premiums in our product, 100% guaranteed. Typically in long-term care, it's just one definition, loss of independence. Well, we have that as well. But if I get Alzheimer's, do I have to wait another 5 years for my family to take care of me until I'm at a point that I can't bathe or eat? Here you don't. And that's the importance of having these three riders up, or these three definitions up here. So here we have 4 definitions. In this industry, it's usually just one. Use it or lose it. Well, in the industry, those long-term care products, which were very expensive, if, unfortunately, if you passed away or never had to use it, too bad, so sad. And the premiums are high. But with IA, well, if you don't use it, there's another benefit. And if you use it all up, well, there's still more. So in the industry, premiums went up every 5 to 10 years, and they're still going up, even though they don't offer the products. Serenity, guaranteed to stay. In the industry, those long-term care products had this unique telephone interview to see how you were cognitively. So they'd phone you up. It's like a 45-minute to an hour conversation, and you'd have to repeat things that they told you in the beginning to see your memory. I can't even remember what I talked to Maria or Nia yesterday about. But if you fail just the telephone interview, you don't get it. We don't have that. Now, we have paramedical telephone interviews. That's different. But we don't have this annoying cognitive interview. That's what they did to people back then. In the industry, those long-term care, it was very hard. You had to apply, see if this is approved. Is this nurse approved? How much money am I getting? And you're going back and forth months to months just to get money. With us, it goes in your account, monthly deposited, no problem. And here, there's 5-year life pay. I can't remember why I put this here. It can be expensive, but Serenity has a paid up version as well, which I'll show you, which is the surrender value. So we can save their money, have a better quality of life, have quick access to healthcare or any care, quality of life, financial support, tax-free right away, and protecting your income and your families. So let's look at what this product does. It is whole life insurance without a dividend. So there's no participation in this. It's a non-participating whole life, where once diagnosed after the age of 65, we will forward 1% of that death benefit to you tax-free each month. And I'm going to get into this and show you a demo on the software. So let's look at the product. You can issue this product between age 15, 15, and 60. Maximum amount is $1 million. It is payable to age 100, but you can have a reduced paid up version. I'll show you after. It is a non-participating whole life. And basically what we're doing, you're diagnosed and we're advancing the death benefit. A death benefit's tax-free. We're advancing this death benefit tax-free to you to use. And if you use up the whole death benefit, well, we still have something else for your families for final expenses. Just to show you a little bit how loss of independence is. So we have that definition in this. Not only is it Parkinson's, Alzheimer's, and paralysis, but if you cannot do 2 acts of these, bathing, dressing, toileting, bladder and bowel continence, transferring, feeding, you can't do 2 of these, you qualify. If we get diagnosed at a younger age, are we taking from our children's education savings plan? Are we depending on our older children to take care of us? Now one spouse is a non-income earner and now we have high cost to taking care of them. Where are we getting that money? How are we not going to affect our family and my children? Couples without children, if it's a husband and a spouse, 2 spouses, if one person is not working and all of a sudden you have high costs and you want to be with them, so one income down, one income may be in jeopardy because you're always going to see them, helping them, you're concerned. It's a lot of stress on someone. To take care of someone, it is a lot of stress. And if you've ever taken care of a grandparent or parent at home, we love them to death, but they need so much more help. And that's what this is about, quality of life. How about new people coming to Canada? What if they come alone in the beginning and something happens? Where are they going to help? Again, the government's not paying for all this, giving you a nice suite and you have a choice of where you want to go. You have to go where they say or where there's an opening. And you have to share a room if you can't afford private care. And there's nothing wrong with sharing a room. But just remember, you don't know and you have no ability to who's in that room with you. And if you have to go to public type of long-term care, with this money, you can always have your own nurse come in or own personal support care worker or family member to help you. Okay, this is where I know all the questions are going to start coming. At age 55, I buy Serenity 65 for $150,000. It is whole life insurance. That's all it is. Non-participating. There's no dividend. Non-participating. I, at age 55, bought this for $150,000. However, I never made a claim on one of those 4 illnesses. At age 82, I passed away. So because this is life insurance, the death benefit gets paid out tax-free to my beneficiaries. If I bought this product at age 55, $150,000, all of a sudden I'm diagnosed, I can't do 2 out of those 6 acts of independent at age 75. Now I get 1% of this every month, so $1,500 into my bank account, tax-free, because it's a death benefit. Oops, sorry. And I passed away at age 80. Well, I used up 90,000 at this point. 60,000 of the death benefit is left over. So this gets paid out to my beneficiaries tax-free. This money I can use any way I want. If I want to take a limo to all those ultrasounds, go do it. If I want to eat organic food, go do it. You can't do that with a long-term care product. You must go by their guidelines and spend the money first before you get reimbursed, and there are conditions. Here, no. Take this money each month and finance what you need. Another scenario is I bought this product. I'm diagnosed at age 73, but I passed away at age 82. So I used up all of my death benefit. It's about eight years, 8.5 years worth of a tax-free benefit. And after that 8.5 years where I never touched my savings, I never touched my other money that I had set aside. I might have to use a little now, but I let that money grow all this time. I didn't have to touch it. And I have zero death benefit. But at time of death, even though I've used it all up, my beneficiaries are guaranteed 25% of that original amount. This is what it looks like. Example 1. I buy the life insurance, the whole life insurance product. It's whole life insurance, that's all it is. And I never had to make a claim. The death benefit gets paid out to my beneficiaries. Example 2. I purchased $150,000 whole life insurance. I used $60,000 worth of the $150,000 and I passed away. The $90,000 goes to my beneficiary. Example 3. I used up $135,000 versus the $150,000. You'll always get that 25%, which is higher. So if it's lower here, we'll top it up to the 25%. So at time of death, not mine, oh my gosh, I will get $37,500 for my family for final expenses. So really, I technically get $172,000. Maybe I used it all up. At time of death, my family gets the $37,500. So technically, the death payout, I used $150,000. My family gets $37,500. Technically, in total, I have $187,000 tax-free. This is the benefit of life and serenity. If you don't have enough to save, and if you don't have enough savings, and no other insurance company now has long-term care in the industry, you have the unique advantage now to help families because there is no other one in the industry and our premiums aren't guaranteed. Now, you might ask, why do we call it Serenity 65? Let's go back a few slides. It's called Serenity 65 for a purpose. At age 65 and after is when the benefit will pay out once you're diagnosed. In saying that, let's say at age 58, I was diagnosed. Built into the life insurance is automatic waiver of premium. So I don't have to pay anymore. It's not going to lapse. And at age 65, I'll get that 1% every month tax-free. So someone said, I seen on the questions, what about critical illness? That's a good question. So I'm just going to go here. I'm going to answer that question when I do the actual software demo. Just to give you an idea, it is life insurance underwriting. Life insurance underwriting. And there are 6 additional questions that are added to it. And these 6 additional questions are basically saying, hey, do you already have signs and symptoms of these things? So you can actually, I've had someone decline for CI, but because the family history question is different here, before age 60, they were able to get this product, which still gives them a tax-free benefit, not a lump sum, but they still can use it if they're diagnosed with one of those 4. Because with critical illness, I believe it's before age 50. But because this question is different on life and serenity, they were able to apply and obtain this product. So here, it's age, if I go back to qualifications, because I think that's what people are asking. Age 15, 15 to age 60. 60 is the cutoff. Your target market is anybody who's helped their parents or their grandparents, who understand what it's like to take care of someone. When my dad had diabetes, this guy was like 6'2", at least 400 pounds. He's a very large man. And my other siblings wanted to take care of him at home. It's not possible. Just to get a customized wheelchair, it's your own money you have to pay. The government doesn't pay for this. The government will have someone come by your house maybe once or twice a week, but here you get the money to have that, or put them in a home where they can be taken care of properly, or pay. My dad used to put his cell phone in his shirt. The people there, they don't check your pockets. All his cell phones went into the laundry. We bought multiple cell phones for him. That's at our cost. So anyone who's taking care of anyone or knows someone who has lost their income because of a disability or a critical illness, they understand, well, what if I have to now live in a home? This is your target clientele, and the cutoff is age 60. So I'm going to show you the software now, because I know it's a lot to absorb, and I hope I'm making it easy to understand. So let's go to the software. Oops, sorry. I think I hit something. Give me 1 second and make sure I'm sharing, of course. Okay. In our software, always note, we're always creating, updating, giving you new products, new enhancements, decreased terms. We'll always put it here. And why are we doing it? Because the demographic of your clients change all the time. If I was an insurance company and I had the same product for the last 20 or 30 years, how is that helping you help families? You have to change with the industry. You have to change with your demographics of clients. That's what IA does. We invest in you and we invest in your clients' needs. And that's why we're always making changes to help you. Make an e-change. Remember I said that? Just click on it, download the file, put in your policy number, verify their date of birth. And from there, it's like doing a new EVO application. Just pick what you want. Am I decreasing the insurance, increasing, adding a rider, changing the funds in my UL? You know the benefit to this? If you do the paper PDF version and you forget one check mark, you're going back and forth for weeks. This makes sure you don't miss anything. Create an illustration. I'll just quickly go. All of our term is renewable and convertible, and here is life and serenity. And here is our non-par whole life, universal life, participating whole life. This is the guaranteed issue and simplified issue. Guaranteed from 6 months old, they can get $10,000. Anyone guaranteed issue. Simplified issue, up to $500,000. No medicals. We don't need to see work permits. No needles, no doctor's reports. Just answer the questions. I would say to do this on the Assure and Go platform, because you can add the riders there. Here you can't. And of course, all of our critical illnesses options to help your families even more. All right. Life and Serenity. Let's open up the software. There we go. So give me 1 second. Once you open the software, it's like doing any life insurance illustration. One thing I'm going to point out, this is whole life. When I put the amount in and the age, people are like, oh, that's kind of expensive. Well, two things to think about. A, I see a lot of WFG helping families with our participating whole life, and it's about the same premium. B, this is two products in one. It's not just one product. They can benefit while they are alive, or it's a death benefit. So they get, you know how people say, oh, I pay for all this insurance and it's only my beneficiaries? Well, this time they get the money if they're diagnosed. So you need to put the name in. Oh, I know this is so creative. I know. And you need to put the actual date of birth. In our industry, the insurance industry, we are 1 year older 6 months before our birthday. And so your client says, I'm not 24, and you're trying to explain, insurance age. Just go to modify right up here. And okay, I can keep your age at 23. However, when this is approved and issued, you will have to pay premiums from June, July, August, September, October, and November. Oh, I don't want to pay 5 premiums. Okay, then you are age 24. So we're going to keep age. If you go to modify and there's no option, it means it's not time that their age is changing. So, and I'm going to make it a female, and I'm going to do 300. So it's $170.10 for 300,000 of life insurance. Remember, when you're applying for this, it's all insurance in total. So if you have so much insurance that you've hit the cap for all insurance companies, you have to remember this is the same thing because it is life insurance. So now I'm going to go to results. The premiums are guaranteed to never change. And remember, I said it's to pay to age 100. Remember those other long-term care in our industry? Those premiums are not guaranteed. They go up every 5 to 10 years, and it's not a little bit that they go up by. Some companies don't have a cap or put in the contract that there's no cap. They can actually go up to, in the next 5 to 10 years, up to 25%. It becomes unaffordable. Is that a word? Unaffordable? Here, your client never, ever has to worry. When you purchase this, it's approved and issued, then these premiums stay guaranteed for life, never will go up. This is the amount of insurance I purchased, 300,000. Now, like whole life, I have a guaranteed surrender value. Surrender means I'm canceling. I don't want it anymore. So if someone says to you, oh, I've had this product for 70 years, I'm fine, just cancel it. Well, they will get back the 96,000 if they cancel it and they never made a claim. So it's a guarantee in the policy to know that, hey, you never use it, cancel it, and this is what you'll get back. Paid up insurance. Okay, what does that mean? Remember I said this goes, you have to pay all the way to age 100, right? What if I don't want to pay to age 100? I've never made a claim, and I don't want to pay to age 100. not a problem. You don't have to lose the policy. Paid up insurance means at any time in this column where there's an amount, if I stop paying at age 85, so I stop paying the $2,041.20. I don't want to pay now to age 100. My death benefit is not 300,000. My new death benefit is 257,000. And if I make a claim under Parkinson's, Alzheimer's, paralysis, or loss of independence, I will get 1% of this per month because I stopped paying here. So the benefit here is I don't have to pay to age 100. I can stop and I will have a paid up version. If I stopped paying at age 75, the benefit is not 300,000, but I don't have to pay any more again, ever. My insurance amount is not 300, it is now 225. And if I get diagnosed with Parkinson's, Alzheimer's, paralysis, and loss of independence, I'll get 1% of this. A question was, well, yes, these are the same definitions for critical illness. And remember, I told you that the payout doesn't happen until age 65 or after. And you think, well, what happens if I get this at age 56? Two things that you can do. If someone has a CI policy already in force, that lump sum will pay out now to help them. Or I can add a CI rider, 25 years to age 75. Let's do 25 years. So in the next 25 years, if I'm diagnosed with those 4 or the other 23, so all 25 illnesses, I'm going to do this for 100,000 for 25 years. If it's not one of the 4, I get the lump sum payout, and this continues on. And at age 65, now I start getting 1% of this. So a CI rider would get paid out first. This would stay in force, but I don't have to pay the premium anymore. And at age 65, not only did I get the lump sum at 100,000 at whatever age I got diagnosed at age 65, I'll now start getting $3,000 a month tax-free. And remember, if I use it all up, 25% of the original death benefit goes to my family for final expenses. So I can add a term rider to sort of cover that time frame. If I already have a critical illness in force, then that critical illness can be used for that. Or you can even do a CI for 10 years for 50,000 because you already have another CI in place. That way you have 10 years additional coverage with the CI. At age 6, so waiver premium will kick in. I don't have to pay this. And at age 65, I will get 1% of this per month into my account tax-free. And there is, after age 65, you must be diagnosed with Parkinson's, Alzheimer's, paralysis, or loss of independence. If you're not diagnosed at 65, you're not getting it. If you're diagnosed at 70, yeah, now we start paying once every month right away. If you never get diagnosed, it's a death benefit for $300,000. At any time you're diagnosed, if it's before age 65, waiver of premium kicks in. You don't have to pay the premium. At age 65, now we start paying the 1% each month. If you're diagnosed after age 65, then you tell IA that you have Parkinson's, Alzheimer's, paralysis, or loss of independence. You can't do 2. And now you're going to get the 1% every month tax-free because it's an advancement on a death benefit, and a death benefit is a tax-free benefit. Again, if everything is used up, there's always something for the family. On the advisor site, there is, if you put in Serenity 65, there is actually a PowerPoint for you to use for families. It's already there. And it simplifies this a little bit so you can show to families. There's already a PowerPoint on the Advisor Center. Just put those in the search engine, put Serenity 65, and you'll see the PowerPoint, you'll see the brochures, everything you need to know about Serenity 65. And as I said, some people who had applied for critical illness and didn't qualify because of the one family history question, they may be able to qualify for this. And I don't think the price is something, if we understand that this is either a death benefit, if I pass away, never make a claim, my family gets still $300,000. Or if I'm diagnosed, I'm getting 1% of that death benefit to me in my bank account to use for whatever I want. There's no conditions. If you've never sold long-term care, those products have conditions, and you always must pay out first. Then you have to make a claim to get your money back. You have to get approved for something that you want. If you wanted a walker, specialized, well, maybe that might not be on the approved list because they'll say just get a general walker. If I get my $3,000 every month tax-free, I can buy whatever I want. I don't need someone's approval. And this is a big difference between those long-term care products. I don't need to be approved. I don't need to fight back and forth to get my $300 back every time I put in a claim. Every month, tax-free, that $3,000 gets deposited. I can use it. I can pay my niece and nephew, if I'm in a home, I can pay my niece and nephew to come every weekend and take me out for a long walk. I can pay someone, my family members, to come cook for me. With long-term care products in our industry that are no longer available, you can't have family members do that. It must be a certified nurse. You can't have anybody come over and help you. With this, the freedom of how you want to have that quality of life and spend that money on how you want to live is very important. And the ability not to use your funds or deplete them, because I have 8 years where I can keep my funds growing. I'm not going to deplete them. Don't forget, the government is not going to give you a big hug because you have to go into a facility. This is a cost that a lot of it will go to the families. There are so many, even when you're in a long-term care, even in private care, there are still extras that you have to pay for. If you have Alzheimer's, you have to pay someone to come and fix out your medications and make sure that you take your medications. Otherwise, it's the family's responsibility. Working as hard as you guys do, I think our families think we have the most flexible work time, but you guys work the most. And if you have to take care of someone by doing all these things, you are taking away from your income because your time will be dedicated to that family member. And there's nothing wrong with that. It is mentally draining. If you've ever dealt with anyone that has Alzheimer's, at a point when Alzheimer's progresses, they yell at you, they scream, they're aggressive. Psychologically, that can take a toll on a person. Or bathing and helping your mom or dad, toileting. These are all things we're all going to need. Don't deny yourselves or other families the right to have a quality of life. We all have to prepare for this. We all do. And if we don't want to all go use our savings, please, please, please help a family. Long-term care is inevitable. You heard the stories through COVID. At least even if you're in a home, you can have someone take care of you while you're in a home, and feed you, tell you stories, take you for a walk, and it can be even a family member. I hope this has given you some idea that helps you understand about long-term care. This presentation will be done again on Thursday and Friday. Hopefully I can give more examples, I think, next time, but just knowing that there are no other companies anyways that sell long-term care versus Life and Serenity, this is something that you can help every family with. And I hope I've given you one thought or one understanding that helps you implement this to help a family. I'm wishing you a fantastic day. I see it's going to be warm again. It's like our second summer. Just know that Alberta has snow. So have a fantastic day. Thank you for all that you do. Thank you for helping all the families. And please feel free to reach out to us. We can do this training for your teams. We can talk about this more on a team training for your office and go over more details. Thank you and have a fabulous day.